breaking down the jobless claims data and some earnings. But now let's bring in our next guest. That's going to be Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Welcome back to the show, Alan.
Morning.
Yep, we got equity markets at all-time highs. You've been pounding the table on this every week here on our show, and are you surprised or not?
Not at all. It's just a relief rally. We're seeing a market melt up now that we've got some less uncertainty, if that's a phrase we can use here.
Yeah.
But nothing has changed. Nothing has changed, and we're going to get a rate cut again today. So we've got all the pieces in place for this trend to continue. Now it's just about money management, about taking profits when you have them, about protecting your gains. But obviously, it gets harder as we get higher to remain, to find these bullish plays. You got to dig a little bit deeper. But being a bull market genius has been very successful.
When when you look at the estimates and the expectations that we're going to get another 25 basis point cut here, we've got the 10-year that's been moving higher since they cut in September. You don't see any headwinds created by rising rates when the Fed's in cutting mode, and it seems like economic data is robust enough. Maybe they don't need to cut, Alan.
So it's a bad problem to have. So This plane has been landed perfectly as far as the soft landing goes. You can read what you want to in the 10-year. We've talked for years. Everybody's using the 10-year as an impending recession. We had inverted rates. That didn't happen because the rates were so compressed. Obviously, inversion was mathematically very, very possible. So I don't read the 10-year as much as some people do for indicators. The short term is drawn by the Fed. Long term is buyers and sellers. So the market does what it does. It got overdone on the downside. You saw some profit taking, and that's why we're here. Now that might have been a blow off top in the 10-year. So let's see what happens the next coming weeks. I think that's a very interesting price action. And everybody gets loaded on one side of the market, one side or the other, and it overreacts. And that happens all the time in treasuries.
Yep. And then we've got Bitcoin down about 2% today, giving up some of those 10% gains that we saw yesterday, hitting all-time highs. But you got a couple individual names you're looking at, and they're tied here to Bitcoin.
Right. And I trade what I see. I don't trade what I think. I trade what I see. And Bitcoin was trading between 50,000 and 70,000, a breakout of that. Targets 90,000. So there's a lot of upside, and people had kind of forgotten about it. And if you go back to the miners had been very depressed and made some bottom bases. You and I both got options guys. One of the biggest things I look at every day, I look at money flow in options. So I use the options money flow accumulation of long or short positions as an indicator. It's not just unusual option volume. I look at how they accumulate positions on the long or short side using options, because that's a smart money. That's a big money, and they usually have a better probability than the average trader. So I've seen that in a lot of these mining stocks. Riot was the first example. Riot traded between $7.50 and $12.50 for 8 months. It had a PE of 6, not that it matters, and it was 80% off its 2021 top. Riot popped. It got up to this $12.50. A breakout above $12.50 now sends it to $17.50. So there's a lot of upside left. But again, it's about money management. I used yesterday as an opportunity to take some of the profits off the table because we had a quick 100% gain. But again, this stock had bullish divergence where it made new lows, but not new highs in implied volatility. And it had that positive bullish money flow indicator. I'd rather be on the side of the smart money. And I think we've all heard before, follow the money.
Yeah, and you got another one, Mara Holdings, M-A-R-A is a ticker symbol. That stock's up nearly 20% this week alone. But if you look at the divergence between, Bitcoin hitting all-time highs and it's been rallying on the back of potential deregulation, maybe some oversight kind of lessening in that area. But those stocks hadn't been participating. So typically that correlation had been broken. But do you see that kind of coming back together?
Exactly. And that was the risk reward on my side for that bullishness. The same thing that we talked about weeks ago in the gold miners, the GDX and all the gold miners started to play catch up to gold itself. The silver miners started to play catch up to silver itself. So sometimes there's a little delayed reaction. But again, the risk reward, this was a, $8, $9 stock. Obviously, the in-the-money options are inexpensive, so it's a good value. I also like CleanSpark. CleanSpark's broken out as well. So there's a number of these stocks. Now, I want to get off in the deep end even. I'm a trader. I'll trade anything, anytime, any direction, as long as there's good liquidity. And again, I'm not getting too deep into why I think Bitcoin's going to go up. You know, there are people smarter than me that have their opinions. I trade the chart, and the charts were great setups, great risk reward. The other trade that I don't even want to mention the name, I'm going to just tell you the chart. His stock's been trading between 20 and 25 for a couple months now, 3 months. A breakout of the range targets 30. And you're seeing that positive money flow in this stock as well. So the stock's trading around, I don't know, 22 and a half or so, right in the midpoint of that trading range. But it's just trading sideways, looking for a breakout, and it's significantly off the recent highs. I'm not looking for a big move. If the stock moves from 22 and a half to 29, the option, the in the money 20 call, doubles in value. So the stock is GameStop, and I am not a meme guy at all, and I'm not a crypto guy at all. But look at the chart; it's all about what the chart says. And I don't want to think, but look at that chart. Anything can happen, obviously. We're in a bull market. A modest move up to that 29 level, the in-the-money option gains 100%. So it's just math to me. It's not about being right. Just like the election wasn't about being right. It was about being right about how the market's going to react. And, I don't think there's any end to this trend in everything. We're in an everything bull market.
Yeah, a little stock replacement type of action there. Less than extrinsic value like GME. Real quick here before I let you go, is this a buying opportunity in gold, that slip that we saw yesterday, Alan?
That's what I'm looking at. We've come down. I want to see how we handle the 50-day to 200-day moving average. And I was thinking that, with this dollar explosion, let's see. We've been between 100 and 105 for a long time in the dollar, a couple of years. So we're at the top end of the range. What's really going to happen with the dollar will determine gold. But there's also a lot of built-up profits. You've got to shake the tree a little bit to get some of those weak hands out. Speaking of GameStop, you got to get some of those weak hands out. Paper hands, I think, is what the kids call it these days. Get those people out, and then the diamond hands will come into play.
Boy, bringing us GME. We'll wait and see on that one. Maybe a buying opportunity.
I'm not 55. Believe it. I'm not a 55-year-old man.
Hey, I am. Back off. All right, Alan, great stuff. Thanks. Appreciate it. That's Alan Nuckman, Chief Market Strategist at BullseyeOption.com. But coming up after the break, Rick DeCat, he's going to join us to cover charts and technicals on Bitcoin, which has been rallying. Mike Zaremski, he's going to cover that move in the banking stocks to the upside. Stick around.